Are you a voluntary welfare organization or charity? Do you provide goods and services at subsidized prices? Do you receive grants, donations, or sponsorships? If you are registered for GST and answered yes to all of these questions, this video is for you. We have split this video into two parts. One is for the charging of output tax, and the second one is for the claiming of input tax. In this part of the video, we will cover topics relating to output tax. Generally, when a GST-registered person makes a local supply of goods or services, he has to charge and account for GST on the selling price. This GST is called output tax. For example, if he sells a book for $100, he needs to account for output tax of $9 using the GST rate of 9%. This is his standard rated supply. But how about voluntary welfare organizations, or VWOs and charities? Oh, look who's here.
Hi there, I'm Val from a VWO.
I heard you talking about accounting for output tax.
I have clarified with IRAS and now have a clearer picture on when to account for output tax on our activities.
Great to hear that, Val. Could you please share more?
I'll be happy to. Recently, I ran a donation drive and I am happy that the public has donated generously without receiving anything in return. These are outright donations which I do not need to account for any GST nor report in my GST returns. I also run a daycare center in Singapore that charges a subsidized fee of $100. This is my standard rated supply, so I need to charge GST of $9 on this fee. When I'm completing my GST return, I will report the fee of $100 and the GST amount of $9. For grants and donations received where I did not provide any goods or services in return to the grantor, I do not need to report them in my GST return.
I get it now. Thanks, Val. By the way, we are having a fundraising carnival this Sunday. Would you like to buy some coupons and redeem them for food or games at the carnival? All proceeds will go to charity.
Anything for charity. Give me 2 booklets. Thank you very much.
Are these coupon sales your standard rated supplies, Val?
Good question. When I provide specific goods and services in return for money received from my coupon sales, I am making a standard rated supply. I need to account for GST on my coupon sales. This is so even if the buyers of the coupons may eventually not turn up for the event and the coupons remain unredeemed. On this topic, I will also be selling crafts that are made by our volunteers at the carnival. I would need to charge GST on the selling price of these crafts.
I see. You really know your stuff. By the way, I have some free time during weekends. May I join you as a volunteer to provide cleaning and gardening services to the nearby residents in return for donations?
That'll be great!
Are such services provided as part of fundraising activities standard rated supplies?
Oh yes, they are. The donations are considered as payments for my standard rated supply of services provided through my volunteers. They are considered as being inclusive of GST, so I have to account for output tax based on tax fraction. This means using 9 over 109 instead of the usual 9%. Here's how I get the output tax of $8.26. The value of standard rated supplies is the difference between $100 and $8.26. But do remember, no GST needs to be accounted on donations received in certain scenarios that fall within the scope of an administrative concession. IRAS has an e-tax guide titled Tax Treatments on Donations with Benefits that you can check out for details. The charity auction is happening now. Let's check it out live online.
It looks like your auction is a great success. The television's market price is probably about $1,000, but it has been auctioned for $2,888. Is there a standard rated supply made here?
Yes, for this television, I will have to account output tax on the OMV of $1,000. The difference of $1,798 between the selling price and the OMV, including the output tax, is regarded as an outright donation, and so I do not need to account for output tax on the $1,798. However, if I am unable to find out the OMV of the item being auctioned, I would have to treat the actual amount of the auction proceeds to be GST inclusive and account for GST based on the tax fraction. Therefore, output tax is $238.46, and the value of standard rated supplies is simply the difference between $2,888 and $238.46.
Oh, look, Val. You were in the news for designing a special wheelchair. What a great invention. How did you get the funds for designing this?
Thanks to the grants that a government agency has given me. I had an agreement with the government agency to design the wheelchair in return for the grant.
Are these grants that you received in return for a standard rated supply?
In this case, although I have designed the wheelchair, the patent belongs to the government agency. As I have received this grant for the making of a taxable supply to the grantor, I have to report GST based on the tax fraction of the grant. Applying the tax fraction on $100,000, I get the output tax of $8,256.88. The value of standard rated supplies is the difference between $100,000 and $8,256.88. Look, the spirit of giving is strong in our community.
That is wonderful. Are these sponsorships your standard rated supplies?
We have to examine the sponsorship in detail. GST will be applicable to a sponsorship received only if my VWO gives benefits to the sponsor in return. My agreement with Big Heart Private Limited requires me to display its name and products in the Carnival's marketing materials and to grant it a booth at a prominent location in the Carnival. Given that I am providing services in return to Big Heart Private Limited, I am making standard rated supplies. I have to determine the OMV of my services and account for output tax. If the OMV of my services is $1,000, I need to account for output tax of $90. The difference between the sponsored amount and the OMV, including the output tax, is not subject to GST since it is not a consideration for any supplies, and I do not need to report this in my GST return. If I do not know the OMV of my services, I would have to account for GST based on the tax fraction of the total amount sponsored. Oh, here is another sponsor. But my agreement with this sponsor does not require me to provide services nor any benefits in return, so I do not need to account for GST on the sponsorship received, regardless of whether it is in the form of cash or prizes.
Val, I saw from your social media page that your staff had a great time at last Saturday's dinner and dance. That top lucky draw prize looks fantastic. Do you need to account for output tax on these prizes?
The cost of that prize is $400. As the cost exceeds $200 and I have claimed input tax on the purchase, it is a deemed supply of goods and I need to account for output tax on it.
Ah, I get it now.
If I have not claimed input tax on the purchase of the prizes, or the cost of the prize is $200 or below, I do not need to account for output tax. I have invited a renowned doctor from Malaysia to talk about caring for dementia patients. Would you be interested to come for the talk this Friday? It is free and open to the public.
Yes, thanks for the invite. I will be there. Did you pay any fees to engage this doctor?
Oh, yes, I did.
Would this be considered an imported service? I read from IRAS website that with effect from 1st January 2020, if we purchase services from overseas suppliers and we are not entitled to full input tax claims, reverse charge will apply. This means that we have to account for GST on the imported services as if we are the supplier. Are you affected?
Ah, yes. Engaging the Malaysian doctor as a speaker for the seminar is considered an imported service under reverse charge. So I need to report the value of this imported service in Box 1 and Box 14 and account for GST in Box 6. For some specifically excluded imported services, we do not need to account for GST under reverse charge. You can refer to IRAS e-tax guide on GST reverse charge for more details.
In this second part of the video, we will look at VWOs and Charities claims on input tax on purchases. Input tax refers to the GST incurred on purchases. How should VWOs and Charities claim their input tax?
Well, the general rule of claiming input tax applies. For example, I cannot claim input tax on certain expenses specifically disallowed by law, such as medical and motor car expenses. You can find out more from IRAS website on conditions for claiming input tax. As I am carrying out subsidized or non-business activities, I will not be able to claim my input tax in full. To find out how much input tax I can claim, I have to first identify and attribute the GST incurred to the 5 categories of activities: wholly taxable activities, free or non-business activities, exempt activities, subsidized activities, and overall operations.
Val, could you please explain more about these 5 categories of activities?
Sure. Let's start with the wholly taxable activities. These are activities where I provide goods and services at market rates and charge GST. They are not funded by grants, donations, or sponsorships. For example, the services that I provide to Big Heart Private Limited in return for its sponsorship of our charity carnival, I account output tax on the OMV of these services. So, I can claim input tax incurred on the cost of printing the carnival's marketing materials with Big Heart Private Limited's logo on them and expenses to set up Big Heart Private Limited's booth.
Val, how about these free health checks that you offer to the public in the community center's multipurpose hall?
Oh, since I provide free health checks to the public, these are free or non-business activities. So I cannot claim input tax on the rental of the hall, food expenses for the volunteers, and any other expenses that I incurred on providing these activities. The output tax that was accounted under reverse charge on any imported services that I incurred on providing these activities is also not claimable. So I cannot claim the output tax accounted under reverse charge on the imported services relating to the overseas speaker.
I see. That applies to free seminars and fundraising activities conducted by charities too, right?
Spot on! Recently, I have rented out a bare condominium unit to another VWO for housing its volunteers who frequently fly in from our neighboring countries to help them in its mega charity events.
Do you think I can claim the input tax I have incurred on the painting of this unit? Let me give it a try. Lease of unfurnished residential properties is an exempt activity, so I think you cannot claim the input tax you incur on expenses to paint or renovate the residential properties.
That's right! You're getting the hang of it. There is one exception to this rule though. The interest earned for placing deposits with the bank is a Regulation 33 exempt supply, which is considered to be necessary and integral to the making of taxable supplies. When my only exempt supply is the placing of deposits with the bank to earn interest, I can claim all my input tax incurred in the making of exempt supplies in addition to taxable supplies.
For your subsidized activities, such as providing daycare services to the elderly and conducting courses at subsidized fees, can you claim the input tax incurred?
These are my subsidized activities, so I can only claim a portion of the input tax incurred on providing such services, say, the cleaning expenses of the daycare center, professional fees for the trainer, and advertising fees for the courses. Input tax incurred on provision of such services is not claimable in full because I received grants, donations, and sponsorships to help fund such subsidized activities.
How about the input tax that you incur on running expenses, such as your office rental, pantry expenses, electricity, and utility bills? These are essential expenses for you to run your organization, but they cannot be directly linked to any activity.
Relax, I can still claim a portion of these expenses by using an apportionment formula.
Okay, let me try to recap what you have taught me on making input tax claims for VWOs and charities. You can claim input tax incurred for wholly taxable activities in full. You cannot claim input tax incurred for free or non-business activities and exempt activities. If your only exempt activity is placing of deposits in the bank and earning interest, you can claim input tax incurred for exempt supplies in full. For input tax incurred on subsidized activities and input tax that cannot be attributed to a specific activity, you can only claim a portion of the input tax by applying an apportionment formula. This is referred to as residual input tax.
Fantastic! You've got it all right. Sometimes I find it difficult to allocate my input tax to the various categories of activity. In such cases, I may choose to apply the apportionment formula globally on all the input tax incurred, other than the specifically blocked expenses, for example, private motor car, medical expenses, etc. However, the GST that I incurred directly on the exempt supplies will remain non-claimable unless my only exempt activity is the placing of deposits in banks.
I see. By the way, what is this apportionment formula?
It is a formula that is used to compute the amount of the residual input tax that I can claim in my GST return for the period covered in the return. This is usually on a quarterly basis. You can calculate the amount of residual input tax that you can claim by taking the residual input tax for the period multiplied by the input tax apportionment rate. You can compute the input tax apportionment rate by taking the standard rated and zero rated supplies plus total regulation 33 exempt supplies divided by the standard rated and zero rated supplies plus grant, donation, and sponsorships received in the period plus total exempt supplies. First, I need to know these figures for the period. Residual input tax. This is input tax incurred on the subsidized activities and input tax incurred that cannot be directly attributed to any specific activity. Remember to exclude input tax incurred on disallowed expenses. If I have difficulty allocating input tax to the different activities, I would just take the total amount of input tax incurred. Standard rated supplies. These are local supplies of goods and services for which I charge GST at the prevailing GST rate and report in box 1 of my GST return. Zero rated supplies. These are export of goods and international services for which I charge GST at 0% and report in box 2 of my GST return. Regulation 33 exempt supplies are considered to be necessary and integral to the making of taxable supplies. Interest income from bank deposit is regarded as a Regulation 33 exempt supplies. For many charities and VWOs, the only exempt supplies that we make is the interest that we received from bank deposits. This will be the only exempt supplies that we report in box 3 of our GST return. In such a case, the total interest that we receive in the quarter will go into the numerator of the formula. If I make other types of non-Regulation 33 exempt supplies, such as sales or lease of residential properties, or sales of shares or bonds from investment activities, I would need to apply partial exemption rules. That's another story. If you are interested, you can refer to IRAS e-tax guide, GST guide for charities and non-profit organizations. Lastly, I need to know the amount of grants, donations, and sponsorships that I have received to finance my activities without providing any goods and services in return. These are also known as non-business receipts. With these figures, I can now do the computation like this. The amount of residual input tax that I can claim equals to my residual input tax for the period multiplied by standard rated and Regulation 33 exempt supplies divided by standard rated and zero rated supplies plus grant, donations, and sponsorships received in the period plus total exempt supplies.
I see. But what if it is not easy to determine your non-business receipt for every period that you need to file your GST returns?
No problem. If I am unable to determine the non-business receipts for each accounting period, I can claim my input tax using a provisional rate. This provisional rate refers to the actual yearly input tax recovery rate for the preceding financial year. And I can compute this provisional rate by using the actual figures recorded in my preceding financial year's financial statement and GST returns. Then, I can apply this provisional rate to my residual input tax for each period in this financial year. Next, at the end of this financial year, I will compute this year's actual input tax recovery rate based on the actual value of supplies, grants, and donations received this year. I will then apply it to my residual input tax amount to determine the actual amount of residual input tax that should have been claimed. Then, I compare this figure with what I have claimed earlier on. I will reduce the amount overclaimed or include the amount underclaimed in box 7 of my next GST return.
I heard that if you are registered with the Commissioner of Charities as a charity under the Charities Act, you can also opt to use the annual fixed rate method.
That's right. charities registered under the Charities Act are granted the annual fixed rate computed the same way as the provisional input tax rate mentioned earlier. The only exception is that I do not need to make the year-end adjustment based on the actual input tax recovery rate for the current financial year. Under this method, I will compute the input tax recovery rate based on the preceding year's supplies, grants, and donations at the start of my financial year, then apply this rate for all my GST returns filed in the current financial year. This rate will be applied to claim my residual input tax or all my input tax if I am not able to attribute them to the various activities. However, I do not need to make the year-end adjustments to reflect the actual input tax recovery rate for the current financial year. This means that at the start of the next financial year, I will compute my input tax recovery rate for next year based on my value of supplies and grants or donations received in this year, and apply it to my residual input tax for each GST return that I file in the next financial year. For detailed illustrations, you can refer to IRAS e-Tax Guide, GST Guide for Charities and Non-Profit Organizations.
Thanks a lot, Val, for your sharing. Now I have a clearer picture on how charities and VWOs account for output tax and claim input tax.
I'm glad to hear that. Remember, if you need more information, do visit IRAS website and its e-Tax Guide.